I'm angry. I gotta tell you, there's some things that I've been hearing recently from people that are close to me and people in my industry that's making my blood boil. Stay tuned because I'm gonna address something on an article that I just wrote about expensive homes and high mortgage rates are causing bad buying decisions. Stay tuned. I've got a doozy for you today. I gotta tell you, I wrote this article and the title is Expensive Homes and High Mortgage Costs Are Causing Bad Home Buying Decisions. I'd like to take you to the article and just share with you a few things about it, but let's just get into the article real quick. Okay, so the title of the article is Expensive Homes and High Mortgage Costs Are Causing Bad Home Buying Decisions. Now, pardon the jargon here, and I'll have a link to this article here. We're going to post it a few different places. By the way, if you're not following me on LinkedIn or social media or whatnot, please do give me a follow or a like or whatnot. It really does help out. I'm trying to grow my social media following. I think we have some good content here. So if you wouldn't mind hooking a brother up, that'd be awesome. Okay, so I started the article by telling people that there's people very close to me and many in my industry that are giving really bad advice, and some just horrible advice. I think that it's easy to buy into the concerns of the client when they say, hey, I don't want to deal with the mortgage rates going up or the home prices, and I totally get it. I don't want to just think that I'm coming from the position of I'm not sympathetic to it. However, it's important to look at all the facts. I mean, basically what we're deciding here is it a good time to buy right now in this market? And the title of this article being, all of these mortgage costs and expensive homes are driving bad buying decisions. I think that is a very accurate statement. So I want to kind of get into the why I believe, in my professional opinion, that many people are misinformed as to the facts. They're misinformed of the facts of the housing market, where it's going, and they're misinformed as to what mortgage rates are doing and what the overall cost to a prospective home buyer will be if they buy versus renting. A lot of people think that they're just going to rent and it's going to be cheaper. That's actually not the case. So I wanted to kind of break this down for you as we go down this article, okay? Let's look at the elephant in the room. And I am a mortgage guy, so obviously I am financially benefited from getting people to buy a house and do their mortgage. But I've never lived my life this way. Nobody gets anywhere in business by tricking somebody into buying something. So it's just not the way I roll. But with that concept of me being in the business, I do know my craft. I'm very thankful that I have spent a lot of time and effort in studying both market, mortgage rates, and trends and whatnot. And I've been in the business a long time. So I've seen things happen. Now, and I also don't want to be so narrow to think that there's never a circumstance by which you should rent over buying. I mean, do I think that the home prices have gone up crazy? Absolutely they have. Have they escalated faster than they ever have in my existence? Yeah, I think so. I mean, the financial crisis was kind of close prior to it, but it just doesn't compare. What I think you're going to see, what you are going to see with the data, is that home prices are still appreciating and mortgage costs are still going to be better than renting. Now, I give you that caveat, and I'm showing my hand, so to speak. But let's go ahead and continue with the article because I have some very valid points here. Let's consider something absolutely crazy. Let's forget about mortgage rates for a second, okay? And let's just ditch the argument that rates are going to fall, which, by the way, they are going to fall. I truly believe they are. Inflation, once that is more in check, you're going to start, all the effects of the Federal Reserve making changes to monetary policy is actually going to be helping mortgage rates in the near future. Okay, but let's just pretend we're going to be at a 5.5%, 5.75% interest rate market just for the rest of our lives, okay? So now, what does it look like to buy versus renting? Whenever I'm making a decision about this, I think of two very simple facts. Number one, is real estate a good investment? And the second thing I look at is, what are my costs going to be if I get a mortgage and have to put money down to get my mortgage down there, and versus just renting? Those are the two things I'm considering. Because obviously with the home prices, is the market going to crash? I mean, this is what pretty much every clickbait YouTuber is talking about right now. And then what about renting? Renting is in a lot of areas just cheaper than buying. So let's address these things. But I want to address the latter first. I want to address the buying versus renting. So let's go back to the article and look at that. Renting is temporary. You guys get that, right? Renting is a temporary thing. You enter into a lease maybe 1 or 2 years, And after your initial term, and I wrote here tongue in cheek, you sure the landlord's just gonna wake up and go, oh, you know what? Hey, after your year lease, we're just gonna lower your rent. No, that does not happen. Rents go up, and that's just the way it works. I find it very difficult to compare renting, which is variable and goes up, versus a fixed 30-year mortgage. Okay, so that's one kind of thing. The other thing is more from a personal basis. I want to kind of take this back out and bring you into my world of what I lived during the financial crisis. Many of you may or may not know that I was hired by Countrywide Home Loans to come on back in 2007 to handle what's called the growing concern of foreclosures. That's funny, right? These guys were doing it all, right? They were doing these ninja weirdo loans, and people were getting in, and home prices went up crazy. And then all of a sudden, the guy who had 5 families living in his house, and the 1% teaser rate started to go up. He just couldn't pay his mortgage. And it was just really awful. This happened to a lot of families. They were honestly, lenders made it way too easy to get mortgages. And then a lot of loan officers like myself, well, not like me, I wasn't doing this garbage, but a lot of loan officers were giving very high cost, high profit loans that people really just couldn't afford down the road. So what happened was people were, the foreclosures hit. I mean, it was a domino effect. But I want to address this point from the landlord's perspective. Many people that bought real estate back and they could get these ninja no income qualifying, they were buying the home as investment properties. People that were getting mortgages back there, multiple mortgage, shouldn't have been able to because they really didn't qualify. So these landlords basically going belly up on their mortgages. And what I saw was that when we had to foreclose, it was really bad. We had to kick families out that were paying their rent to their landlord, and then the landlord was not paying their mortgage. Now, this is just a kind of a long out way to say that you as a renter have absolutely zero control over your future. I can't tell you how many times I heard of the family that we had to go to their door and offer cash for keys and a week to get out of the house. I'm not saying that we're headed for foreclosure. I'm saying that when you rent, you lose control of where your family can be. Rents go up, you have zero control, you're always going to be moving, you're not staying in one place. So if you want to lay down roots and you want to have that security, and if I can prove to you that your actual rents that are rising are going to be more expensive than a mortgage payment, even at 5.5%, I think you should pay attention. So what I'd like to offer you is if you go to my website, loanwithrick.com, and you go to calculators, there's a buy versus rent calculator there. I'd be happy to give that to you. It analyzes pretty much every market across the country using a historical and forecasted appreciation analysis. And it gives you real numbers that you can work with your personal criteria. Now, I wanted to say one thing, just to kind of back up a second. I think a lot of the reasons that there's been bad advice out there is that people are giving advice based on their own personal bias. I get on my team a lot as well because they tend to make decisions for their clients based on their personal position or their personal bias. If you're advising somebody, you have to put yourself in their shoes. You always have to look at it through their lens, right? How many kids do they have? What are their future financial goals? What are they looking short term? Do they have sufficient reserves and assets? Can they stomach the mortgage payment? Is it even smart to risk buying right now? Hey, this is a good question. Is it smart to risk renting right now, right? Because this is the big issue. So I'm of the mind that we need to stomach the mortgage payments of where they are today in lieu of some future benefit. Okay, and I'm going to get into that a little bit more later. Let's go down here and now let's go ahead and talk about the housing market. The question is it still a good investment? So now let's forget the word investment. Let's just talk about whether or not I'm literally going to be up a creek without a paddle. That's what I say in the article. It's like, am I getting into something that's just going to crash? Is the $500K home that I'm buying today, is it going to be worth $450 in 3 years? That's really what I want to know. Let's be real. And I go into here, this is really the fear of the buyers right now. When I look at all the buyers that are exiting the buyer pool, it's really that. It's what's going to happen to home prices. I don't want to pay over. Why am I paying over when just the market's going to crash? Seriously, who are people listening to? There's no crash coming. We are still seeing a moderate to still heavy appreciation in pretty much every market across the country. Now, I did a YouTube video. It was a YouTube short. It talks about this guy, this pretty big YouTuber. He said Zillow reported a big housing crash, and he cited cities that had dropped 50%. Now, the one thing that was a kind of a joke about this when I went into the data is that he was making it sound, and like most people make it sound like the market's going to crash. We're off 50%. People immediately think that the home value of $400,000 is going to be worth $200,000, or the $1 million house is going to be worth $500,000, right? But that's not what this article is saying. Zillow is saying is that the growth is slowing by 50%. So if they were showing growth prior to months of 20%, 50% of that is still 10% appreciation. In fact, Zillow came in and they still expect home values over the national average to be about 7.8%. Now, this was a couple months ago, and they've since revised that in a lot of the counties and areas. But let's just say it's still way over normal. Okay, we're still in the 4 to 5% range. So you can check a look at the video. I've got a link here to that short that I did as well. So I just want to kind of lay the groundwork to say, bottom line, we are not depreciating. Homes are still growing in value in most every city across the country. And, the larger cities like, DC metro area where I'm from, or even South Central Florida, a lot of these areas on the coastline, Charleston, South Carolina, pretty much anywhere near a military base is pretty impervious to these market changes. Now, you can probably check the data and maybe tell me I'm wrong, but I'm just going to disagree because, I've looked at the data. I've looked at these spreadsheets of data, and I've seen what has transpired over the last several years. And you're not going to convince me that we're not still going to be appreciating. It's just not going to happen. Let's just look at this. So the question is, what do you do? So now you have my opinion, and I think backed by a lot of experience in the mortgage business with mortgage rates and also my data on the housing market. Here's what you do. You should buy now. You should buy now, even though it's a bit of a stretch. And I know rates suck. They're higher. Your mortgage payment's higher. You still got to put a down payment to get in, just whatever. But rates and home prices are, let's say, exaggerated. What affects your mortgage payment is obviously interest rates. One thing I know about interest rates, and if you go back over time, interest rates go up and they go down. They don't go up and stay up. They don't go down and stay down. They ebb and flow. This is a beautiful thing. So you have to know when to refinance. So I guess to make this point really hit home is that if you bought now and you buy with a higher interest rate, over time, whether it be next year, next 6 months, which is what I believe, or within the next 5 years, rates are going to go up and they're going to go down. So we just need to catch it when they dip, right? So you catch every dip when they dip and you lock into a new lower rate. But I wanted to give you some tips on refinancing because it's really important to know how to refinance. When you're refinancing in an interest rate market that's going down, you don't want to pay closing costs. It's frivolous. And never, ever, ever pay what's called LPMI or upfront mortgage insurance. It's just ridiculous. Even now, right now, you don't want to be paying that. You try to limit your closing costs if at all possible. It is a little bit difficult to limit closing costs right now because all the lenders know that rates are falling. So they're not giving any loans it's very difficult to get a loan with 0 points or even with a lender rebate. It's very, very, very difficult, almost impossible, because lenders know that loan is going to pay off in probably 6 to 8 months. So if they think that, there's obviously something behind it, right? They kind of know it's coming. All these people are pretty smart. So when you refinance, just keep on doing it as low or no cost as possible. Keep the cost down, lower your payment in chunks. And then when we feel that we're near the bottom, that's when you pay the closing costs. You finance it and you just lock it in the rate. Let me tell you, every mortgage payment that you make has a little bit of principal in it. Okay, so you're paying your principal down. You're building equity, which is one of the biggest things people forget about when you're looking at renting versus buying. It's just that matter of there's the appreciation, obviously, of the home, right? But there's also the fact that part of my payment is going towards principal. And, when you just compare renting versus owning, you can't do that. You have to compare renting versus interest only on your mortgage to really be fair. So because your mortgage payment has some of that principal, it's like a forced savings plan. It's going into your equity. So, consider that when you're looking at it. So the conclusion of the matter, in my opinion, is not vanity. I love how the book of Ecclesiastes, says that it's all vanity, right? But my conclusion is not vanity. I just want to implore you, buy now. There's really no downside, honestly, except the amount of money that you be putting down, which is no short feat, but again, it's an investment. And obviously, you may be having a higher payment than you would renting. But remember my comment on the principal curtailments that you're making with your mortgage payment. So it's really, probably more apples to apples than you think. So here are my 3 simple points. Home prices are high, and they're going higher. So you have to buy now. If you look at this market and you consider the $500,000 house you're looking at right now, and it appreciates 10% in 1 year, well, that same house is worth $550,000. And the issue is people's income are not keeping up with appreciation. Okay. The second point I have is rates are higher right now, but they are going lower. So you buy now and you refinance. I've heard this statement where you marry the home and you date the rate. Well, that's exactly what's happening. You date the rate because the rates will go up and down, and you can catch it on the downswing. But the last thing and the most important thing is renting sucks. Renting is expensive. So buy now. Renting is absolutely worthless. You're going to be paying more over time. You're going to have to move, and you have absolutely no stability for your family. So I am now officially your truth speaking, probably going to get a lot of hate comments about this, but you know what? I really don't care. I'm going to speak my mind. I'm going to tell you guys what I think is right, and it is right to buy now. I will stick to my guns. I've always thought that no matter what interest rates are doing. That is a secondary thing. You have to look at the market, and you have to look at your alternative. If I can leave you with anything, let me leave you with that. What is your alternative to buying? Staying with your family? No. Renting and then having to move in another year? I mean, do you have kids? Do you have a family? I mean, if you're military and you're going to be bugging out in 3 years, okay, maybe. But side note on that, I mean, military, you're putting no money down. So if you make out a little bit, you put no money in it, and you're going to have a positive, huge return of investment. That's another story for another day. But please, we do a lot of VA loans, so please call me, okay? Hit me up. Anyway, this has been Rick Elmendorf. And hey, please be sure to hit the bell, follow, give me a comment, ask some questions, and I'll see you on the next video.